Someone just tried to sell you a life insurance policy you already have, and the worst part is you almost signed it. Policy churning and abusive sales tactics are quietly draining billions from everyday Americans. And today we're pulling back the curtain on every single trick in the playbook. Let's start with what churning actually is, because the name sounds almost too casual for how devastating it can be. It's when an agent replaces your existing policy with a new one, not because it's better for you, but because it generates a fresh commission for them, leaving you with higher premiums, a reset surrender period, and a smile on their face. Think of it like a mechanic convincing you to buy a brand new car every 2 years instead of just changing the oil you keep paying. They keep winning, and your garage never actually improves. The system is technically legal in its gray zones, which is exactly what makes it so insidious and so hard to fight. Here's the behavioral economics piece that nobody talks about. Agents exploit your trust during vulnerable moments, a new baby, a job change, a death in the family, because that's when your defenses are lowest and your fear is highest. You're not making a financial decision at that point. You're making an emotional one, and the commission structure absolutely knows it. The optimism you felt signing your first policy, that I'm finally protecting my family, feeling gets weaponized when an agent tells you that policy is outdated, inferior, or about to lapse. One solid coverage gets reframed as a liability, and suddenly you're doubting a perfectly good decision you made years ago. Experts like your state insurance commissioner will tell you that the #1 red flag is urgency. If someone is pressuring you to decide today, that pressure exists entirely for their benefit, not yours. As the late consumer advocate Herbert Denenberg once said, the first rule of insurance is that the agent's interests and your interests are not always the same. History is full of these cycles. The 1980s saw massive churning scandals inside major whole life carriers. The 90s brought settlement mills and vanishing premium frauds. And today, it's indexed universal life policies being twisted into something unrecognizable. Each era feels new and uniquely predatory, but the engine is always the same: misaligned incentives dressed up in professional clothing. One of the biggest misconceptions is that if something is legal, it must be fair, but suitability standards in insurance are notoriously weak compared to fiduciary standards in investing. An agent can sell you something that technically works for your situation, while still being wildly inferior to what you already own. So here's your practical checklist before you ever sign a replacement policy. Demand a side-by-side comparison in writing. Ask the agent directly how much commission they earn on the new policy versus keeping your old one, and contact your current carrier before canceling anything. If they hesitate, deflect, or suddenly get very busy, you have your answer. Discipline here means slowing down, because the urgency they create is manufactured, and the decision timeline they're imposing is fictional. Position sizing in insurance means not restructuring your entire financial safety net based on one persuasive conversation with one motivated salesperson. Watch for these specific red flags, like a hawk. Agents who never ask about your existing coverage, illustrations that use unrealistically high projected returns, and any suggestion that you should borrow against your old policy to fund the new one. That last one, the policy loan to fund a replacement move, is a churn wrapped inside a churn, and it's as ugly as it sounds. The philosophical truth underneath all of this is that the best financial decisions feel boring. They don't require a slick presentation, a countdown clock, or a folder full of color-coded charts designed to confuse you. Consistency, verification, and a second opinion cost you nothing and can save you everything. You don't have to be paranoid to protect yourself. You just have to be process-driven. Ask the uncomfortable questions out loud, and never let someone else's commission schedule become your financial emergency. Whether you keep your current policy or genuinely upgrade, the outcome you want is clarity, not pressure. And if you're ready to build a financial foundation the right way, whether that's through real estate investing, home contracting work, or connecting with trustworthy lenders, check out our links in the description below.